So this video came from a Stats Edge Pro trading subscriber. We have monthly webinars where people can come in and we hang out on Zoom. They ask questions. They talk about whatever they want to talk about. That's kind of the deal. Grab a couple beers. They're usually 2 to 3 hours long. If you're interested in Stats Edge trading at all, links are in the description down below. This question was mainly about how to do a trading plan. The user was kind of struggling building their trading plan. So I went through and I pulled out the iPad and we just started marking up all of the different things that I would put in it, the difference between a trading plan, a trading checklist, things like this. I hope you like it. Back to the more regular content and streams and stuff after my vacation, after Labor Day, and I will see you guys then. Right? A trading plan is really a pitch. So always frame it like that. Like you're going to Jim Simons, right? Who, again, if you don't know Jim Simons, the man who beat the market's a great one. And you're saying, okay, I need $1 billion. And this is why, right? This is what I'm going to do with that. If you can't explain your trading plan in that way, I think you've already have to go back and look at it, right? If you're just like, hey, I'm going to do what this AI I bought for $100 a month is telling me to do, or I joined this room and I'm just going to do what this guy does, you're going to get laughed out of the room, right? So again, think of it not as you're doing it for yourself, but you're doing it for someone else. Same way as if you're opening a restaurant, you would have a trading or a plan that you would say, hey guys, this is what I need. This is what I need the money for. I'm going to open up a restaurant. I'm going to open up here. This is how much I think I'm going to get in foot traffic. This is how much I think I can generate traffic from other places, things like that. So it's a pitch meeting of what you're going to do. And, kind of separate that out into, first time frame. And you can have different trading plans, right? So the way I day trade is completely different from the way I swing trade, which is, different again from some of my crypto and Forex type stuff. And then also, what are you going to trade, right? I don't recommend, especially new traders, trade all of the different stuff that I trade, right? That's a start one thing, be at least moderately successful at that one thing, and then branch on to another thing. The next one would be risk, right? And this is going to be up to you, what you're going to risk per trade. For me, it's always between kind of 0.5 and 1% of the value of that particular account on any given trade. So, say you have $100,000 account, you'll be trading between or risking between $500 and $1,000. Again, if you are not currently consistently profitable, drop that like by a tenth, right? Risk $50 a trade. Understand that probably after commissions, you won't make money, but who cares, right? You're not risking that amount, but that's going to kind of be the thing that you're looking for. And then it's going to be, what's your edge? Right. And this is what a lot of traders don't ask themselves, but should. And by edge in trading, we mean what is the thing that you do, or that your skill set or personality or something that is going to allow you to beat people like Goldman Sachs, Renaissance Capital, all these giant conglomerate monsters, right? How are you going to beat those individual things? And it may be something as simple like, I deem my edge from a swing trading point of view is how nimble I can be, right? I can be in and out of a swing trade in seconds, whereas giant firms take longer. That in and of itself allows me to keep my risk super tight and have asymmetric gains. Things like this, you need to be asking yourself. And then also, okay, what's your setup? Right. And this should be visual, where take actual screenshots of what your setup is, of what it is that you want to trade, and put it in your screenshot. And again, prepare this whole thing in like a Google Doc as I'm going to pitch this to, again, a hedge fund or a prop firm or something like that. Because if you end up being good enough, you can do that, right? If you end up getting a good track record, there's no reason why you can't take that, take whatever courses you need to in the States, take it to a firm and say, here's my trading plan and here's my track record for that trading plan, and just give that to them and they'll fund you with a bunch of money. right? That's what prop firms do, right? They give traders capital and traders trade those capital, and then there's some sort of profit split. So all of these things you're breaking down as things go, right? You're saying, okay, I'm framing this as a pitch. I'm going to say, hey, I am going to swing trade equities. I'm going to risk 0.5% of the value of my account. My edge is, that I understand, I've studied technical analysis for a long time. I understand how to avoid news events. These are the things that I know that I think give me a leg up over everybody else that I'm trading against, because this is all a kind of competition at the end of it. And then here are my setups. I'm going to look for pullbacks to this, or I'm going to look, right? There's really only 3 ways to trade, right? You're either trading in some respect, and there's nuances to all of this. And this is always why I say keep things simple. There's, pullback, there's breakouts, and then there's just revision to the mean, right? So trying to buy tops and bottoms. That's it, right? Other than arbitrage trading and index fund, things like that, which, none of us here have the capital or anything to get into. Those are your 3 ways of trading. So again, frame them like that. And then put your visual, your best setups in there, like take screenshots of the trades that you had that they were the best, and you put them in the plan. And part of the reason for that is it's going to give you something to compare against, because this isn't a stone tablet that you can never adjust. You can change this as much as you want. Don't do it too frequently. I know a lot of people will go in and they'll have a bad trade and they'll adjust their trading plan. That makes no sense. There'll be people who have a good trade and they go in, make sure there's a statistically significant amount of occurrences before you change your trading plan. But set it up like this, where you have these setups, and setup needs to include entry, stop, and then reason for, it's hard to see around my mic, and then reason for exit, which, could be profit target, could be trailing stop, however it is you want to do it. But that all has to be laid out in this trading plan. There we go. If that doesn't make me sound too bad, that's better. And that's the trading plan part of it. And that should be kind of printed off, and especially when you're new, hung up somewhere, because then you can look at the trade you're about to make and you can look at your setup and say, yeah, it's a setup that I can trade, away I go. And then after that, it's your checklist. Right? And your checklist should just be that. It should just be, geez, this is why both art school and English class I did horrible on, but it should just be a checklist. And, it should be, the checklist should be derived from your setup. So we're going to go with, you're someone who you look for a stock in a strong trend, and you're going to look for it to pull back. And we're going to say that that's a moving average, and you're buying the moving average, right, with your stop under there. Right. So you may start with primary trend. Right. And then that's either going to be a check or it's not. And it's going to be pullback to MA. And then, little things like volume, earnings. And this is something that you can adapt, earnings/news. And this is something that you can adapt way more frequently than your trading plan. Like if you take a trade and that trade hurts and you're like, oh, I should have done this better, you can go ahead and just adjust this right away. So it's like when I send out the TI strength alerts email to everyone every weekend. I have a checklist like this that says, hey, did you update this? Did you do this? Did you do this? Did you do this? And again, think of it as like a pre-flight checklist. Have I done this thing? 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 If I've done all those things, then I can place the trade, right? And you'll go through and you'll scan and you'll, tick them off as you go, initially on paper or iPad or whatever, a note thing or Excel spreadsheet, doesn't matter. Eventually it will become mental, where I do the same thing. Every stock I look at, like, especially if you guys check out my stream, I hit down on the keyboard, I look at the stock, and what you guys don't see that's going on in here is a checklist like this, right? So that's how sometimes I just slam through a stock, and sometimes I stare at it for 5 seconds and then I ignore it. It's because in my head I'm going through all of these checklists. Is this something I'm interested in? Does it meet this, and this criteria? And then after that, that's about it, right? Don't, again, just like anything else, don't overcomplicate it, but you're trying to say, what is your trading plan for that particular market? Again, your setup shouldn't have to do with, I see your question, uptrend, downtrend, chop. It should have to do with that setup. Like, you should have a drawn out